Everyone's chasing the next big thing. But what if the smartest plays right now aren't the flashiest? In June 2025, the real winners are companies quietly raking in billions, building serious momentum, and flying under Wall Street's radar. These aren't just growth stocks, they're profit machines hiding in plain sight. In today's video, I'll walk you through 5 powerful stocks that are not only growing fast, but actually delivering strong bottom-line results right now. Some of them are household names making massive pivots. Others are stealth operators in biotech, energy, and asset management. But every single one has the potential to dominate this next bull cycle. Let's jump in. 1. Brookfield Asset Management, ticker BAM. Let's start with one of the most overlooked wealth-building machines on the market, Brookfield Asset Management. This company manages over $1 trillion in assets across infrastructure, renewable energy, private equity, and credit. In 2024 alone, Brookfield brought in $2.36 billion in net income. What makes them so attractive isn't just the size, it's the structure. Brookfield earns steady fees managing real-world assets the global economy can't function without: roads, data centers, clean energy, and more. And unlike other asset managers, Brookfield invests alongside its clients. That means their capital is working just as hard and their interests are aligned. As the world shifts toward real assets and private credit, Brookfield is perfectly positioned. This is the kind of stable compounding engine most portfolios are missing. 2. Argenx, ticker ARGX. Now to biotech, where profitability is rare, but Argenx is breaking the mold. This Dutch biotech company reported its first profitable year last year, pulling in $830 million in net income. The star? Vugart, a groundbreaking treatment for autoimmune diseases like generalized myasthenia gravis. Not only is the drug FDA-approved, but Argenx is pushing into other autoimmune conditions with 10 phase 3 trials currently underway. Even more exciting, they're launching a self-injection version in the US, which makes it easier for patients and paves the way for widespread adoption. Biotech is a risky game, but Argenx's balance sheet is strong, and with multiple shots on goal, this could be one of the most financially sound growth stage biotech stocks in the world. 3. Cotera Energy, ticker CTRA. Want exposure to energy, but without the drama of price swings destroying your returns? Cotera Energy might be your answer. This U.S. oil and gas producer operates in the Permian, Anadarko, and Marcellus basins, and they've mastered efficiency. Drilling costs are about $800 per foot. Even in a choppy energy environment, they pulled in over $1.25 billion in net income last year. But here's the kicker. Cotera returned nearly 90% of its free cash flow to investors through dividends and buybacks. That's a massive return on investment focus. While commodity pricing is always a risk, Cotera's lean operations and strategic acquisitions make it one of the most resilient names in the space. 4. Robinhood Markets, ticker HOOD. Robinhood is the ultimate comeback story. Once dismissed as a meme stock, it's now quietly turning into a fintech powerhouse. The company posted $1.68 billion in net income last year. Yes, actual profits. And it's no longer just a trading app. Robinhood now offers IRAs, a gold credit card, AI-based budgeting tools, and even crypto staking. With 24-hour trading and deep user engagement, it's targeting the next generation of investors with full-service financial tools. The risks? Regulation, especially around crypto and payment for order flow. But with its platform expanding fast and profitability locked in, Robinhood might just be writing one of the most surprising turnaround stories in fintech history. 5. Genmab, ticker GMAB. Another under-the-radar biotech gem. Genmab has been raking in serious profits, $1.19 billion in net income last year. Known for developing antibody-based therapies, they co-developed Darzalex with Johnson & Johnson, a blockbuster treatment for multiple myeloma. What sets them apart is their smart partnership model. They collaborate with large pharma companies early, sharing costs, but also revenue. This lowers development risk while still generating steady royalty streams. Genmab's recurring revenue grew 35% last year, and with late-stage trials and a recent $1.8 billion acquisition to boost their oncology pipeline, this company is not playing it safe. While U.S. retail investors haven't fully caught on, that just means more upside for early believers. These 5 companies, Brookfield, Argenx, Cotera, Robinhood, and Genmab, aren't just growing. They're profitable, disciplined, and poised to lead in their industries. Whether you're into infrastructure, biotech, energy, or fintech, there's a stock here that offers both upside and stability. But remember, markets change fast, so always do your own research.